Just a reminder, nothing I share here is financial advice. This is all based on my own experience, my strategy, and how I see the market. You're responsible for your own trades, so always do your own research, manage your risk, and never trade money you can't afford to lose. This content is meant to help you learn and think for yourself, not to copy or follow blindly. Let's keep it educational and intentional. Hello, everyone. Let's have a look at a few charts. I'm not going over the charts that we already discussed a few times because the higher time frame targets are clear. If price moves lower, then we have the power law bottom area where we historically look for a bottom formation. Or we spend time sideways and, in my opinion, make a higher low if time passes. That's based on the power law metric and some other metrics that I shared in Telegram. We also have horizontal levels in this area, so overall, it's a nice area to look for support and a major bottom, at least for me. I've repeated it a few times, so I don't want to waste your time repeating it again. Instead, it's better to focus on the current range. And if that sometimes means we need to wait for a setup to come to us, or wait until it plays out, then that's part of the job. So let's look at what we had marked out previously. First, we have this weekly wick. If you watched the previous videos, you know we marked out the previous week's wick, mainly the 50% retracement. In that area, we looked for confluences, because a fib alone is just the percentage retracement that price made. So it's always best to have additional levels there. We did that the previous week, where we had some levels in that area. And from there, I still hold my long. We marked it out again this week, and yesterday the area was touched. That was my first area of interest because we also marked out a 3-day level and a daily level as a zone aligning with this fib retracement. So overall, a good confluence. Yes, we had a few levels in between, but that is always the case. We always have some levels in between. What we need is the patience to wait for the levels with more confluence. It depends on the situation, of course, but if you focus on high confluence levels, you mostly have a good chance to catch strong reactions. So, what to look for now? First of all, whether this level holds or not. It can wick inside or below it, but for more upside, you want this level to hold first and then give the right reaction. The reaction would be reclaiming the weekly open and the point of control. If that happens, then we obviously have a good reaction from the level because the bounce led to a reclaim of resistance. In that case, I would aim step by step for the high of this range. First, this box above, and only if that gets reclaimed, higher toward the daily OB. Those would be the next levels for me to look for the next short. Not here in between, because I already have a short from higher, so it doesn't make sense for me to open a new one here. I'd rather wait for the higher time frame levels. If it's a bad reaction, then we simply see a rejection and a loss of this level. With that, price would enter the lower part of the range, where I would look for the next longs, below the previous week's low, starting with an SFP, and if that fails, then a bit lower. Something to keep in mind, if price moves below this level, it technically loses it. So later we would need a reclaim for signs of strength. And that's basically it about this range. We have some bigger levels like the range low and the daily OB, and we have a local range inside where we can look for longs and shorts. And with that, we come to our scribble chart. Here are the trades I've taken in this range. We have the long from the low with some TPs taken on the way up and a runner still open. Then the short with TPs taken on the way down and a runner left. And then another long, again keeping a runner. So if you are in similar trades, then of course you can see that we need to wait. The target for the long has not been reached yet, and that's what I'm aiming for with this trade. Now, I could have taken other trades in between, but for me, they were low probability trades because I didn't like the lows, or it was simply too high for me to take another long. The same goes for the short. I didn't want to add to my short and preferred to keep it running until price moves into one of my entry areas. That's where I would start looking for new trades, below my long entry and above my short entry, aiming for the same higher time frame areas. Of course, the market can do whatever it wants, but I need to follow the process that I always follow. We have technical targets like resistance and support levels, and has price to move toward these levels. So I can only aim for them and pay myself on the way up or down until either the target gets hit or I need to take another attempt toward that target if the conditions are met. With that said, we had marked out this level, the weekly wick level, together with the 3-day and daily level. We saw a weekly open with a poor low and high. Then Monday fixed both sides, made a high and a new low. So the next area of interest was this level, as shown in the previous video. In yesterday's Patreon video on Telegram, I also showed the Monday range and the average loss level, which at that time was placed near the Monday low. So if the averages align with the Monday range, then the first idea is to look for either an SFP of the high or of the low. Price moved down and SFP'd the low. On the daily time frame, it's an SFP. On the lower time frame, it left the Monday range, hit the point of interest, and came back inside. So on the lower time frame, that was a deviation. So what do we have to look at today? First of all, as said, for now, I don't plan new trades and will update if that changes. I need to wait until we either get lower for a new trade or higher toward the target. That means we need to show discipline. Well, discipline in planning the trade, executing it, and then allowing it to play out with TPs on the way. There is no need to rush if you're already in trades. And if you're not in trades, then you need to look for entries and try to keep a runner. That's why I share the levels in between. We often get nice bounces from these levels, and if you entered where you were supposed to, TP1 was almost always available. And if price moves higher, you have a runner. It sounds simple, but it requires practice. Nothing is as easy as it looks on the chart. Execution is a big part of trading, and probably the hardest part, the part where most emotions show up. You always see people sharing perfect charts, but not many talk about execution. And we all know why. It's the hard part. Many people are good at charting, but fear of failure and ego get in the way. So you end up with many people sharing charts without showing execution. Maybe they say, "Here was the line. I shared it. It bounced 20%. I told you so." But if you're not in a trade, it's your fault. I have a solution for that. How about telling people where you are entering, where you set limits, or how you handle the trade afterward? I can assure you that only a small group of people do that. I try to be one of them, to be open and share the plan and the execution. That helps you and others move forward much faster, Mike, because then we see what is actually useful and what is not. It's useful when someone shows how they trade a level, how they execute, and how they manage it. It's not useful to share tons of scenarios and levels, but never show execution. In hindsight, someone may look smart because their drawings played out, but in many cases, that's not what they actually traded themselves. That's the sad truth. So what I want to say is, don't lie to yourself or to other people. You will make faster progress, and it will be more useful for the people around you, whether it's wins or losses. Losses are a different story, because everyone likes to see winning trades. The reality is, we don't always have winning trades. It may sound crazy, but when you look around, it seems like everyone is always right and always in the best positions. But no one talks about how many attempts they needed to get that one good trade. People always share the good results. The reality is, you will have losing trades. And when a win streak ends, some people start to criticize you for getting all the good trades before. Anyway, that was a small part about execution. With that said, yesterday I marked this level out. I didn't trade it myself, and I also updated that. For me, I'm really just waiting for either lower prices or higher prices. If you are in a similar situation, then it's time to show some patience. Now let's see what we have locally. The average gain sits today right above the weekly open, and the average loss sits at the lower part of the support area that we had marked out. That means if price comes down again from here, we can look for a similar setup, an SFP or a deviation. If it starts to lose this level, then I would aim lower toward the next area. And that's where I would start looking for longs again. On the upside, the weekly open and the average gain are the current resistance. If that area gets reclaimed, then I would aim for the Monday high to be touched. There, one can look for an SFP of the high if looking for shorts, but the better setup would be higher, and that's what I'm waiting for. So you see, even if there are local levels and plans working out like I drew yesterday, it doesn't mean I have to trade everything I see. For me, I'm already in a trade and need to show discipline to hold it until it plays out, whether it hits the SL or the full target higher. But if you are looking for local trades, then this level we marked out on Monday was a good one. The Monday high is a good area, and the weekly open needs to be watched from both sides. If you're longing, it's a TP area because price can reject there. If you're shorting, it's also a TP area because price can hold it as support. So it's always wise to secure some profits. No financial advice. And that's basically it. Not overcomplicating things with much lower or higher targets. Yes, we have them, and we've talked about them a few times. But we also need to focus on what is happening now. Right now, we're not at 50K or 100K. We are ready if those levels come, but the focus is on this range. For now, that means waiting for the trades to play out or for another entry to present itself. That's a quick update. Hopefully it was helpful. Make sure to check out the Patreon. Have a nice day, and see you in the next one.